All right, what's going on, guys? We should be live. This is going to be our How to Trade Footprint series part 2. We're going to be talking about how to trade footprint charts, but in this part, we are going to be talking about specifically how to trade a higher time frame footprint, so a 30-minute footprint. We'll get started here in a few minutes. Going to give people some time to get in. Hopefully, at this point, you guys have seen part 1. If not, you can go back and watch it after we finish this one. This one shouldn't be too long, probably about 45 minutes to an hour. We are going to do the same thing that we did yesterday. I'm going to start off by going over my settings for the current chart. We are using NinjaTrader 8 for the 30-minute footprint. So we're going to talk about what our exact settings are, how to kind of match the chart that we have currently. Then we're going to talk about specifically how to read certain setups on the 30-minute footprint. This one is going to look a lot different from the 5-minute footprint that we talked about yesterday. The 5-minute footprint that we talked about yesterday is a very standard footprint. This one is something that I kind of cooked up to find where the trapped buyers and trapped sellers are on a higher time frame. So it's not going to look similar to all the other footprint charts that we are going to talk about in this series. Let me make sure my alerts are off. Okay, they're good. All right, let's get started. So if you guys are just coming in, this is going to be the How to Trade Footprint Charts Part 2. Hopefully you guys have seen Part 1. If not, make sure to go back and watch that if you are watching this in VOD format. If you guys are watching this live, just stick around for the live stream and then go back and watch Part 1 once we are done. We're going to start off by going over our settings so you guys can match the chart if you guys are using NinjaTrader 8. If you guys are not, you could probably try to match it the best you can on your platform, but it might be a little difficult with this style of charting. Let's start off with the settings, then we'll get into how to determine if buyers or sellers are being trapped on a 30-minute footprint. So starting off with the settings, let's go to the data series here. Basically the same settings that we had on the 5-minute, but it is going to be volumetric, 30-minute, bid to ask, and this is one of the big changes. Instead of having 1 tick per level, we had to tighten it up. So now we are using 2 points for each level. So that's 8 ticks per level, which if you guys are ES traders, that is 2 points. So we're using 8 ticks per level, 0 size filter. We're loading 3 days worth of data. This doesn't really matter. You can load as many days as you would like. We're currently using the cache setting, I believe. It only opens up at 9:30. We are using the Delta chart style, so make sure you have it set to Delta, not bid and ask. We have show as profile turned on, show volume turned off. Now this is important here. Strength sensitivity is set to 20. I believe that's default, but this is the most important setting. Size display filter we have set to 1000. This basically means that it's not going to show us any numbers on that footprint unless it is over 1000 contracts. Okay? So make sure you have that set to 1000 or whatever you prefer to filter out. The rest is just color settings, very standard. This is personal preference, but I will show you my settings if you would like to match it. Now, if you are matching it for NinjaTrader, if you want to hide everything but the numbers here, you have to make everything transparent. Okay, so that's why these are all transparent, because we are hiding everything except for the levels that are getting over 1,000 contracts. Okay. So make sure you set things to transparent if you want it to look like mine. If you would like to see the boxes and the candles, then you can leave that on. Show maximum is turned on. Maximum is yellow. Color for text is white. Visual is display in data box. I believe it's all default down here. Okay, so one more trick with the settings if you guys want to match my chart. If you are using a volumetric chart like this, it will not show you a price line like we have currently turned on. So what I have to do here is if we go to the indicators tab, I have turned on a 1 SMA. So basically what it's doing is it's putting a 1 moving average on the chart, so that will act as our price line. So make sure you have it set to calculate on each tick, or it's only going to calculate on each close if you don't change that setting. Okay? Everything else should be default, and then once again, the color settings are just preference. Now, a couple more things I have turned on here if you want to completely match my chart. This doesn't really have to do with footprint, but I do throw on the volume profile on this chart. So throughout the day, I will be watching the cash session volume profile on this chart. But it doesn't really have to do with our footprint series here. This is just the chart that I use for my cash session volume profile. Okay. So we have that turned on right here, and these are the settings for that. Profile type is volume, display mode is outline, profile period is sessions. We're using 1 session with the real-time hours, the cash session. 1 tick per level for the profile, 70% value area, 60 minutes for the initial balance, and then everything else I believe is default. Profile alignment left, width is 60. Everything else is color settings. Okay. A couple other things that I look at on this chart, once again, not really related to footprint, but if you would like to match it, I do have a couple of things on the bottom here that I'm currently hiding. If I unhide these, you can see here that I have the cumulative delta in the ticks and in the actual delta. So we're watching the cumulative delta on the 30-minute and the ticks on the 30-minute. So I'll go ahead and hide these for now, and I'll show you my settings for those as well. So the first one is set to bid and ask with a 0 size filter. Calculating on each tick. And where is, yeah, that's the bid and ask one. And then the second one here is the up-down tick. So if you want to look at the ticks, you would use up-down tick. But all right, that is it for the settings. Let's get into the actual bulk of the video here. So what we're going to be talking about today is how to read this chart on the 30-minute and how to determine if buyers or sellers are being trapped on the footprint. Okay, so the biggest pattern that we look for when we're seeing this is, let me go ahead and take a little screenshot here. The biggest pattern that we look for is the V-shape bottom or kind of the A-shape top. So when you're watching the SMA, which is basically our price line, we want to look for when the SMA is pushing strongly into a high and then topping out aggressively, or pushing strongly into a bottom and bottoming out aggressively. That is the first sign that we look for. The second sign that we look for, let me get rid of these really quick. The second sign that we look for is actually on the footprint chart. So when we have that V-shaped bottom, what we want to see is a negative delta on that low. And because we have that 1,000 contract size filter, it is going to be over 1,000 contracts on that footprint. So basically anything over 1,000 will start to show. And we want to see that negative 1,000 or higher on the low of that V shape. And basically what that is telling us is people were aggressively selling the low of that push, but they were not able to get very far in profit before getting trapped. Okay. So we look for the negative imbalance on the way down, and then we want to see a positive imbalance on the way up. So somewhere around like here on that V-shaped reversal, we want to see a positive imbalance. Okay. So we want to see a negative imbalance on the low and then a positive imbalance pushing up. Basically, what that's going to tell us is that's going to tell us that there is a strong bearish demand on the low of that candle, but they did not receive any profit on that push. They are getting trapped. And on the way up, we are seeing strong bullish demand, and that is trapping the sellers. Okay, so imagine if the price was pushing down and the sellers were selling the low of the day, and then it started to bounce off the low of the day, and now we are seeing an aggressive buyer block. There is a strong buyer demand holding price back above the low of day. What is going to happen to those sellers? They are most likely going to start squeezing out of their contracts. They're going to start buying up their contracts to get out of their positions because they are being trapped. They did not get a single tick or a single point in profit, right? They are being trapped. Now, as they squeeze out of their contracts, we will continue to see price push higher with a positive imbalance. Okay? So we want to see a positive imbalance on the way back up. And that will indicate that the sellers that are on the low here are being squeezed out of their positions. Okay. So now that we know what to look for, let's take a look at today and see if we had any instances of that happening. And let me just get rid of this and we'll start fresh. Okay. So a couple times today, we actually did see little micro squeezes. So during the start of the day, we had a strong buyer imbalance on the high right here. If you look at this right here, we have a positive 1,000 and then a positive 1,300 on this upper node, which was the first and second session of the day. Basically, just imagine that there's candles here. This would be the first candle, and then this would be like the second candle. We do not have the candle bodies turned on, so you can't see that, but we know just based on the time chart that that is about where those candles are. Okay, so looking at the high of the day, we have a positive 1,000 contracts and a positive 1,300 contracts. We know that those contracts were not seeing basically any profit on their positions. Because if we look at the profile that we have right here, this green profile, there is no value in this upper area right here. So these contracts right here, they bought the high a day. These contracts nearly bought the high a day, but it was actually a lower high, but they still did not see any profit. Okay. So what did we see after those contracts started to get trapped? We saw a negative imbalance, which came in right there, negative 1,200 contracts, 1,179 to be exact. But we basically saw a positive 2,200 contracts on the high, and then negative 1,200 contracts on the low. So think of it as that A-shape reversal. We have the positive contracts on the high, and then we have the negative contracts just below that, squeezing those contracts out of their positions. Those positive contracts are currently being trapped, and then they are starting to be squeezed on the way down, right? So these guys here are being trapped. They are starting to be squeezed look at the price action. Very strong push down, right? This was obviously due to news, so this is not the greatest example, but on the footprint, it is still the same type of price action that we look for. So once again, on the way down, we saw a negative imbalance right there, and then we started to see a strong negative imbalance on that candle right there. Okay, let's get rid of this, and let's look at the low a day here. So looking at the low, we see a similar pattern. So on the high a day, we saw that A-shape reversal. Now on the low a day, we see that V-shape reversal. Okay. So looking at the V-shape, what do we want to look for? We want to look for negative imbalances that are trapped on that low of the push. Contracts that did not see any profit or barely any profit. Okay. So in this case, we had these contracts right here, that negative 1,000. We had some contracts over here, negative 1,200. We had some contracts right here, negative 2,000 and negative 1,200. These are all very close to that low of day. Now, you can argue that these contracts right here actually received a decent amount of profit. Okay, because you can see there is a lot of value below those contracts. Same thing with these contracts. There is a decent amount of value below those contracts. These contracts, not so much. You only have basically from here to there. Okay. So out of all of these contracts, the only contracts that I would really consider trapped would be probably this 1,000 right here. Because they are basically on the low a day, and there is very little value below those contracts. You have a quick fall off on the profile. Okay. So the next thing that we look for, because we know that those contracts are trapped on the low, so we have that negative imbalance on the low, we want to look for the positive imbalance on the way back up. So we want to look for a positive imbalance right here. So we see that these contracts are negative. And now look at what happens on the push back up. We see positive 2,700, positive 22, and then positive 1,100. So there is about 5,000 to 6,000 positive contracts right here. So these contracts are starting to get squeezed out. All right. What happens after that? We basically start to see a push up into this area here. Now, it doesn't show you on the moving average because it quickly came back to the POC, but we know that price was trading up here because of this imbalance. All right. So we know that when we started to push the low of the day here, we had about 1,000 contracts get trapped. On the way back up, we had about a 5,000 to 6,000 contract bullish imbalance. Then they started to push higher and squeeze these 1,000 contracts out of their position, and then they started to top out with a negative imbalance on the high up here. Okay. So one more thing you can look for with these higher imbalance charts, these 30-minute charts, is if we are pushing, let's say, a high, if we're looking for a reversal, what do we want to see? We want to see a positive imbalance on the high and then a negative imbalance below that. We want to see the buyers getting trapped, right? But what if we don't want to reversal trade this? What if we want to follow along with the trend? If we want to follow along with the trend, then we want to see positive contracts on the way up, but we want to see value above those contracts. Okay. This is where you would tie it in with a 5-minute footprint. So go back and think about what we talked about yesterday. We talked about how to read a 5-minute footprint and figure out where the bullish demand is, where is the bearish demand. So think about that and tie that into the 30-minute footprint here. So if we want to be a trend follower and we want to follow this trend and we start to see those aggressive buyers on the high, we want to be careful and make sure they're not getting trapped. So we don't want to see that kind of A-shaped top where we have negative contracts below them. So if that's not happening and we want to still follow this trend, we want to watch that 5-minute footprint to make sure there is bullish demand coming in above that imbalance. Okay, so in this case here, we did have a couple of strong imbalances on the high there, but we had no value above them. So if we wanted to be a trend follower right here, we would have needed to go down to the 5-minute chart and waited to see if there was bullish imbalance above that, or sorry, bullish demand above those imbalances. Okay, so if the imbalances are right here, we needed to see that bullish demand above those imbalances. Okay. Going back to the reversal side of it, if you want to reversal trade this, then let's say we have that A-shaped top. We have the positive imbalance stuck on the high. We see the negative imbalance coming down below the positive imbalance, which is going to start to squeeze. Then if we stop seeing imbalances, so like this part right here, we don't see any imbalances, right? So how do we determine, how do we trade that position right there? That is when you go down to the 5-minute chart and you figure out where is the bearish demand. If we are seeing bearish demand in this block right here, then we can continue to look for that squeeze. Okay. If we do not see the bearish demand in this block right here, and we start to see positive imbalances or bullish demand, then it is most likely going to retrace back into the high. Okay. All right, there's one more example I want to show here. Let me pull it up. And this is a trade example that we were taking a few weeks ago. It was happening quite often. Sorry, the screenshot's a little blurry. I'll see if I can find a live example after this. But basically what's happening here is this is like a 3-point reversal, right? It's an ABC kind of 3-point reversal. And what is happening is price began to sell off during the start of the day, and it actually gave us a little bit of bullish, or sorry, negative imbalance. Let me grab a screenshot here. And we'll take it from here. Okay, so let me start over. So at the start of the day, you started to push down and it found this negative imbalance, right? The bears were pushing down and they were being quite aggressive. But what happened? We actually ended up seeing that V-shaped reversal that we look for. So we had that negative 1,258 contract imbalance stuck on the low there. And then on the way back up, we saw 3,000 contract bullish imbalance. Okay, so we have that V-shaped reversal happening on that first pullback of the day. Now, on the secondary push, on the second session of the day, we saw an extremely aggressive 30-minute candle. And that 30-minute candle had, let's see here. It had 1, 2, 3, 4, 5, 6 levels that were showing massive bullish imbalances. Okay. So basically think of it as a big candle like this. And then throughout that entire candle, we are seeing extremely aggressive buyers. They are buying up that V-shaped reversal and they are pushing it back up, right? There's one major problem here. It was not able to hold above that buy side imbalance, right? So all of that imbalance on this candle right here was quickly reversed. All right. And we've seen this multiple times where if we see an extremely aggressive 30-minute candle that has multiple either positive or negative imbalances throughout that entire candle, if it cannot show bullish demand above that candle, it can very quickly retrace that entire candle. Okay. So where you would want to target on a candle like this is wherever the imbalances started to form. So in this case, the imbalances started to form there, or they started to form down here when it was trapping those 1200 contracts. Okay. So basically what's happening here is there was a V-shaped reversal. We had the negative contracts selling the low, positive contracts on the way back up right here with the 3,000 contracts. Started to push higher with a very aggressive 30-minute candle. Then you had 1, 2, 3, 4, 5 imbalances on that candle on the way up, but there was no bullish demand above that candle. So the confirmation to continue that trend was not there. And you would have had to use a 5-minute footprint to see that bullish demand, right? That's why you want to tie what we talked about yesterday into what we're talking about today. If we looked at the 5-minute footprint and we saw bullish demand above that imbalance, then we can continue that trend, right? But we did not see that. So once it begins to retrace that bullish imbalance candle, it is very likely going to retrace the entire candle. It's kind of like the value retrace theory that we talk about in volume profile. Okay, so we had 5 imbalances that were quickly being retraced. Now we have to think about, that's a lot of contracts, right? And sorry, that's 6 imbalances here. There's 6 imbalances here. And that's 1,000, almost 2, so that's 3,000, 4, 5, 7, and then 8,000. So about 8,000 contracts are being trapped on that candle. So we know that there is an 8,000 contract or higher buy-side imbalance on this candle here. So what does that mean if we start to push below that candle? Most likely those contracts are going to start getting squeezed, right? So the more contracts that you have in that 1 30-minute session on that imbalance, the higher the likelihood of a squeeze is if you are losing that value. Okay. So because there is about 8,000 contracts there, that is very high for a 30-minute candle like that. There is a high likelihood that they are going to be squeezed if we lose that value. And that's exactly what happened. You can see on the line right here, we just start to squeeze those contracts all the way down. And once it loses that volume node, it just completely gets obliterated. So we lost that volume node right here around 36.95, and then it just squeezed all the way down. And while you're squeezing, it's very likely that you'll see a tree-shaped profile where you have a bunch of little nodes, but it's not staying in one area for very long, right? And the reason you're building up those nodes is because they're being squeezed out of their contracts. So you have the sellers that are selling to open their positions, but then you have the sellers that are also selling to close their positions, which causes a little bit of a buying frenzy. People think that they're actually buying, and they're not, right? So you have those nodes start to build up, and then it starts to fill in that kind of tree-shaped profile, which the textbook refers to as a thin profile. Okay. So let's go back, and I saw a few examples of this happening yesterday when we had that nasty price action on the choppy day yesterday. So let's go ahead and expand this. Okay. So before I even go over this, just take a quick look at this. I know if you guys are not used to looking at this chart, it's just completely confusing. There's just random numbers everywhere. But try to look at this chart and try to find a couple of examples of what I just talked about before I start showing you exactly where they are. And I'll give you guys a few seconds who are watching live. If you guys are watching the VOD, just go ahead and pause it, and then we'll show you exactly where these levels are. But okay, so let me take a screenshot of this. And there are a couple levels here that are very important. Hopefully you guys were able to find at least a couple of them. Okay, so the first major one is right here. This one is very obvious because we have that V-shaped reversal on the SMA here. The next one would have been either right here or right here. This one's not as obvious because the trend line, or excuse me, the price line is not going up to that level. The next one would have been somewhere around here to there. And we'll go over all of these individually. Okay, so let's start off with this one here. So starting off with the pre-market, you could see the pre-market was selling off very rapidly. And then we started to bottom out on the open of the day. 9:30 would have been this candle right here, these right here. And then this would have been 10 o'clock. So first and second sessions. So we have the pre-market selling off. And then you started to find a very strong bearish imbalance on the low of the day. Negative 2,000 contracts there, and then negative 1,300 right there. Then you started to push back up with a small positive imbalance right here and right here. You did have a couple of negative imbalances throughout that move, but you did start to see that V-shape reversal. So basically, the first sign that these traders were being trapped was obviously the negative imbalance. We have the negative imbalance towards the lower day right there and right there. And then look at the volume profile. This is why I like putting on a volume profile on the 30-minute footprint chart, because we can clearly see there is no value below these contracts. So these 3,300 contracts that are showing that bearish imbalance, they had zero profit on the way down. There is no value below their contracts. Okay, so anybody that was selling to open a position down here, they were selling the bottom and they were being trapped. Okay. So once we started to see that V-shaped reversal and we saw those positive imbalances come in, that's obviously when we would go to the 5-minute chart and do what we talked about in part 1, where we would look for the bullish demand. Okay. And as long as we were seeing the bullish demand come in, you could reversal trade this as long as you continued to see that demand. And we didn't see any trapped buyers. Okay. All right, moving on to the next one here. We had this one right here. And these guys really got trapped. You can tell they got trapped very quickly because the price line did not even show that it went up into that area. Okay. So if the price line doesn't show that it's going there, that's basically a wick. It's creating a very quick buy up and a very quick sell off. It's not staying there long enough for the price line to close in that area. Okay, so they really got trapped. They got trapped very quickly. So we saw 2,500 contracts on the high right there, and then 1,500 contracts on the high right there. And then on the way down, we saw a negative imbalance, which was indicating the bears were trying to push that down and squeeze out those long contracts. Okay. So basically price pushed up. They did not see any value above them, and it came quickly back down, and it came all the way back down to right around there. Okay, we have one more here to go over, which was that last one. And this was basically happening at the close of the day, so you have to take it with a grain of salt, obviously. But basically right here, same thing. You can see that the price line did not come down to that area, so it must have been a very quick reversal. And we have the 2,000 contracts being trapped on the low with very little value below them. You have that constant fall off in value, which all of this value on the profile was created during the opening session, not during the closing session. So basically, once these guys sold, there was no value below them. Okay. If you were looking to trade that as more of a breakout and you were looking to sell that, you would have had to go down to the 5-minute and figured out if there was any bearish demand below that imbalance, which in this case, there was not. Okay. So you can quickly see that V reversal on the price line, and then you started to hold around the POC there with a bunch of imbalances. But all right, that is basically it for the 30-minute. That's really the only pattern that we really look for on the 30-minute footprint. We look for the trapped buyers and the trapped sellers, and we look for any contracts over 1,000 on the 30-minute footprint, and we want to see a cluster of those contracts usually for the squeezes. If we're looking for a lot of contracts to be squeezed, then we want to see a lot of contracts being trapped on the way down or the way up. The biggest thing to remember is to just look for the A-shaped top or the V-shaped bottom, and then you want to see no value being traded on the other side of those imbalances. Okay, and if you have to, just go down to the 5-minute chart and confirm that you are not seeing any value on the bullish demand or the bearish demand. We talked about that in part 1. But before we close it, do you guys have any questions before we call it a video here? I can cover any questions you guys have on this type of footprint charting. I don't think we have any questions, so we're going to go ahead and end it there. For part 3, we are going to be talking about this chart over here. Let me show you. For part 3, we will be going over looking at absorption on a much smaller time scale. So instead of going up to a 30-minute, we're going to be going down, to a volume chart and seeing how quickly these contracts are being absorbed on the very low time scale. Okay. So once you know all 3 of these, you'll basically know how to look at it on a tiny time scale, on a bigger time scale, and then on a medium time scale, which would be the 5-minute. The 2500 volume chart is basically seen as a 1-minute chart, but it can be even quicker than a 1-minute chart. It could be closer to a 30-second chart, or sometimes even faster than that, depending on how much volume is coming in. So basically you'll have like a 1-minute chart, a 5-minute chart, and a 30-minute chart. But all right, guys, that is it for the part 2 of how to trade footprint charts. We will be covering part 3 tomorrow. Actually, we will be covering part 3 on Thursday. We can't cover it tomorrow because of the FOMC. So we will be covering part 3 on Thursday at 3 p.m. Eastern. If you guys want to stop by for the final conclusion, I believe that will be the last video unless anything comes up in the meantime. But all right, guys, that is it. If you guys like the video, make sure to hit that like button. If you guys are new to my content, make sure to subscribe. If you guys are brand new to my content, you haven't seen any of our teaching videos, be sure to check out the How to Trade playlist or the Volume Profile playlist. And we go over a bunch of different trading techniques throughout those videos, so you guys could learn a lot from those. Definitely check them out. But all right, guys, appreciate you guys being here. I will see you guys tomorrow for our live stream at 9:30, and I will catch you guys for the part 3 of this video on Thursday. Have a good night.